Hey everybody, Courtney Smith here. We got big changes in Wall Street winners. I'll tell all you fully paid up members the big changes coming up here soon. But first, let's dive right into it. But hang on for these big changes. You're going to love them. All right, and you're going to love this too. You're going to probably print it out and put it on your mantle over your fireplace. Okay, we got some changes in the market as well. You can see here that the S&P made new all-time highs. The purple predictor had been very strong over the last couple of weeks, but it kind of weakened here a little bit. But still, got to count this as a clear bull market. Now, here, this is kind of interesting. The Dow has really been the leader to the upside. First of all, the green arrow points to a little gap that we left on the chart. That's usually a very bullish sign. And you can see in the purple box that the green line accelerated to the upside. At the same time, the red line went down, which means that buying pressure accelerated, selling pressure declined. And then the black line is called the ADX, and it's confirming that we're in a bull market. The Nasdaq, really? Look at this. After looking at those first two charts, you'd be surprised to find that this is the third big index. We're not making a new high. The purple predictor is slipping lower. We have a divergence. The Nasdaq made a little mini new high, but the purple predictor did not. That means the Nasdaq is not where we want to be. And we don't like the fact that 2 out of 3 indexes are making new all-time highs and one is not. We don't like that type of divergence. It means that the underlying fundamentals in the marketplace are not as strong as they may appear. Now, seasonality remains bullish. I've raised our flip point, the red line, to 165. So if it goes below 165, the IWM, then I will switch to seasonally neutral. Not bullish, but neutral. According to Stock Traders Almanac, we're getting very close to an explosive fourth quarter. According to Ned Davis, we're getting very close to a very strong but choppy fourth quarter. Nonetheless, fourth quarter looks very good coming up. The yield curve, well, you can see that actually it's kind of in the middle. It's in a non-event point. I've been highlighting the lower right-hand corner. You can see we were down below 75, but now we're back up to 90, and that's taking some pressure off the market. You see, the yield curve, when it gets down around 25, or even more importantly, when it gets to 0, you almost certainly have a bear market coming up. Are you ready for this? There's never been a bear market in the history of the United States with the yield curve at 90. So there's not going to be a bear market right now, and there's not going to be a bear market soon. Asset allocation. This one's fascinating to me because when I get to the bonds, I'm going to come back and refer to this chart, but this shows that money is going out of the bond market and into the stock market. Out of bonds, into stocks. So that's providing the liquidity that goes into the stock market. Now, it also appears to me that the bonds that they're getting rid of are high quality bonds like treasury bonds and AAA corporates, and they're buying they're selling AAA corporates and buying AAA stocks like Dow 30 stocks. And part of it is, like I showed you the previous chart. Okay, so they're selling bonds, they're buying high quote unquote blue chips. This shows that the risk is low. It was much higher back in June. Now they don't want to take that much risk, i.e. they want blue chips, not frisky stocks. Global shares, very strong over the last couple of weeks, but still not in a bull market. Now, here we can see the bonds are being trashed. The bonds are being trashed. And that, you can see they're selling the bonds, therefore the bonds are going down, and they're buying stocks, therefore stocks are going up. This is very intriguing to me, and we'll get into this. So why is all this happening here? Well, you can see here that the green line are the 10-year treasuries. This is a chart of the price of treasuries. This is a chart of the yield of treasuries going up. And you can see the blue line, which is 10-year treasuries in Germany. That's been the major reason why we're seeing the 10-year treasuries go up in the US. But let's break this down a little bit further. If you look at the blue line and you look back from the beginning of this year back to the far left-hand side of the chart, you can see that the blue and the green lines, in other words, 10-year yields in Germany and in the US, pretty much were the same. The far left side of the chart and the far right-hand side of the chart, they've been different. That divergence is not going to last. We're going to see them come together. The only question, of course, is, does that mean that Treasury yields in the US are coming down and or Treasury yields in Germany go up? But they will converge again. Now, the little black and white chart, that's the CRB index, it's starting to move up, and that's putting upside pressure because it's a leading indicator of inflation. The gold line is gold. You can see it stabilized. Didn't go up, but that stabilization was enough to also put upside pressure onto US Treasuries. The dollar, look at this. So as this is showing that Treasury yields are going up, but the dollar broke down. Now last week I showed you this potential head and shoulders, and I drew that uptrend line. And last week we had just barely broken below it. This week we gapped below it. We need to be short the dollar now, and this is going to have ramifications throughout the world. One of the things that have been crushing emerging markets was the fact that the dollar was so strong. Fully paid up members, we're going to explore this concept more in the fully paid up section. If you're not a fully paid up member, you really need to become one now because of the changes that we're making. I'll talk about those later. Gold should now start to bottom. If the dollar is weak, gold should be strong. So far it's not. But you can see I've marked a potential head and shoulders bottom. But Friday's price action was awful. If the dollar's going down, gold should go up. If it doesn't go up, with that bullish news, we got to get short big time gold. So this better turn around and start going back up again. Our indicators, the top two indicators, mildly bullish. The bottom indicator, clearly bearish. Oil, not interested. We're trading at the same price we were in May. This is going to be stuck in a trading range for some time. Bitcoin. Now look at the purple predictor. We got down to about, well, I said we get down to 6,000. We got down to 6,000. But we didn't break the 58.94 channel low. And instead, you can see that the purple predictor is skyrocketing. It's moving sharply higher. In other words, when Bitcoin got down to sub 6,000, we saw a lot of smart money come in and buy. Now, the last time we had this happen was just a couple of months ago, and we got back up to the highs. I don't know where they were, like, I think this is like about 7,000. So look for this rally to get up to 7,000, and then we need to see if the smart money starts selling like they did the last time we got to 7,000. All right, but right now look for it to rally back up to these highs over here, and then we need to take a look and see where we go from there. All right, upcoming events, September 22nd and 23rd. I'm actually recording this at the event. And we're having a great time here. Great people here. Be sure to sign up for our October 6th and 7th Option Success School and book your tickets for Dubai later in the month. Now, here's a big change that's happening. I've just issued a special report called How to Profit from the Coming Financial Crisis. Check your email. If you're not on our email list, go to wealthbuilderllc.com and sign up for our list. This is a free special report. I want everybody who's watching this to get this free report and read it. I'm now seeing the early warning signs of the next financial crisis, and I believe that it's going to be worse than the 2008. In this report, I show you why I think it's going to happen. I give you an idea of when it's going to happen, and I show you how to protect yourself and how to profit from this financial crisis. Now, as a result of this special report, I'm now going to be updating the information. I'm going to be monitoring this. I'm going to be revealing what's going on in the financial crisis in every paid up member version of Wall Street Winners. In other words, if you're a fully paid up member, I'm going to show you the monitoring, because this is such a huge, momentous change in the marketplace. We've got to be making some serious, serious money, and we need to protect ourselves and our family, our house, our job from the coming financial crisis. So we'll be monitoring it. We'll be revealing as it goes along. And this is now going to be a part of Wall Street Winners every single week. So if you're not a subscriber, really, I'm sorry, but you have to subscribe now. If you just look, it's a peanut to protect your family. It's the best insurance policy you'll ever get. All right, that's it for me. For you freebies, love having you. Fully paid up members, just hang on 1 second, and we will talk to you in just a second.